Something huge is happening with wheat. First off, read this disclaimer carefully. We will look at natural resources. So we go here, boom, natural resources, and we're going to look at one of the grains, and this is wheat. Here's the distance from the 52-week low, 52-week high. We will look at the futures and the ETN. Okay. First, let's look a bit at the seasonality of wheat. So here we are looking at the wheat futures actually. And these are the months in which it closed higher than it opened between this time period. Okay, we are currently in June. You can see that June and July is actually one of the stronger months. That's interesting. 53% of the time it closed higher than it opened. If we go further back, between 1990 to 2009, a 20-year period, you can see here that from June heading into August, this was a strong period. So this is the past, and this is the most recent developments. You can see that August has been a bit weaker. There's been some change in seasonality, but the general trend is that heading into the later part of the year are stronger for wheat. Okay, so that's interesting. That builds a bullish case. Let's now look at the charts. These are weekly data points, and we can go way back here, way back. You can see that there's been different patterns before. This is a long rounding bottom that led to a euphoric super rally. Let's just measure this rally from this low to this euphoric high. That was 368%. That's pretty darn impressive. After that high, we have had a pretty nasty bear market, but like we had a rounding bottom here, which formed a bit of a cup and handle. You could argue that this is a bit of a deformed handle. But anyway, here we do also have this multi-year rounding bottom pattern. That's interesting. There is a pattern here. If you look at the most recent developments, you can see that it's a bit of an erratic rounding bottom, but you do see this overall trend. If you measure here from this low to the recent high, that's 54%, and that's pretty good on wheat futures. So there's obviously something happening. We are seeing that the red 200-week moving average, a very slow moving average, has gone from being very negative to now turning positive. So there is constructive development here for wheat. RSI is in the neutral zone. There's a 44% correlation with S&P 500. Now let's now look at the correlation. Let's look at the correlation with between the ETN and the wheat futures. Okay. Then we have the wheat futures here, and no surprise, there's a perfect correlation between the wheat futures and the wheat futures. Let's just do some daily data point analysis before we get the ETN. Yeah, you can see here, looking at the most recent developments, because we do have this rounding bottom, that does tend to shake around the moving averages, because that's what happens. You have these up and down gyrations. There also seems to be some cyclicality here. Let's see if we can get some clear cycles. Let's do it like this. We do actually have some decent cycle patterns here. Rise, declining cycle, rise, decline. Rise, decline, suggesting that there is maybe a little bit more left in the declining cycle, which fits with the seasonality as well, that we could be heading into some nicer parts of the wheat cycle soon. So that's interesting. But long term, it does seem like you could build a bullish case here for wheat. Okay, so the wheat futures, the futures market is a bit tricky to get into. There's all kinds of leverage. It's complicated. It is not something you start with. If you are going to trade wheat futures, always practice in a paper trading account. Whenever you do something you haven't done before, do it first in paper trading. and only go into live account if you are consistently profitable. Okay, then let's look at the WEAT ETN. It's the Techrium WEAT. Also, you can call it an ETF. Okay, so we do not get an extraordinary amount of data here. Here we have the weekly data points. You can see that within this time frame there is no correlation between the wheat futures and this ETN. That's not what we want to see. That doesn't, you could still trade this one as a way to get exposure to wheat, but you just have to take into account that it behaves a bit differently. If you look here, you could make the case that we're forming a bit of a rounding bottom here as well, but you see that there is clearly a downside bias that we didn't see in the futures. If you look at the daily data points, on the daily data points, things, we do get more data points here generally than we got on the weeklies. And when we do the math here, then the correlation actually is much better. Here we do have a 95% correlation on the dailies. Given that there's more data points here, you could strongly argue the case that this is more meaningful than what we found on the weeklies. We would ideally want to see a 99% correlation, or even 100%, but 95%, it does suggest there is some tracking error. There is a divergence, but there is, a strong positive correlation. So, okay, that's decent. Meaning, this is a way to also get exposure to it. Let's just change this back to the S&P 500, like that. Looking at the ETN, you can see that we do not get that very clear rounding bottom pattern we had on the futures, but you do see that there is a bottoming pattern. There seems to be a low in place. Hence, yes, this is also a way to get exposure to wheat. Here is the ETF. Expense ratio is on the higher end of the spectrum, 1%, but that is because of how these are structured. Okay, so let's just go through this, because it's very important to know the difference between the futures and these products that try to track a commodity futures. Okay. Like many exchange-traded commodity products, wheat should not be expected to deliver exposure to spot wheat prices, because the underlying index consists of wheat futures contracts. Factors such as the slope of the futures curve and the current level of interest rate will impact the performance of wheat. One distinguishing factor of wheat, and of all Techrium agricultural products, is the structure of the underlying holdings. Instead of concentrating holdings in front-month futures, wheat spreads future contracts across multiple maturities. This is done with the objective of minimizing the impact of contango on bottom-line returns. That's good. At least they are doing something to prevent the major issues we saw with the oil ETN. Okay. Yeah, I mean this is a decent way to also get exposure to the futures. Okay, so let's now talk a bit about what affects the price of a grain like wheat. Okay, so weather, it's a key factor. So if there's any surprise change in the weather, that will have an impact. So we're talking about precipitation, humidity, temperature, sun exposure. Animals, like this friend here in the background. That's, you have, of course, grain-eating wild animals like birds, insects, and microbial organisms. Certainly have an impact. You also have seasonal variations, international trade and competition, forex exchange rates, and human population growth. Okay, so let's go back to the set wheat, which is the wheat futures. Okay, so my take here is that we are seeing that there is a rounding bottom pattern in play. We have seen that in the past as well. And when we looked at how the wheat ETN was structured, they are tackling the issues with contango, and the correlation on the daily data points was decent. It was pretty strong, and that is an alternative way to get exposure to WEAT. Okay, but there seems to be a long-term, potentially very interesting pattern that's favorable for the bulls. Okay, and we saw the seasonality as well over a long period that seems to be favorable towards the later part of the year. Well, heading into August and so on. I mean, heading into autumn. Autumn. Okay. Here we can see that the S&P futures are showing some S&P 500 futures are showing some weakness. There is some pullback today as well. So this is rather interesting. There's no sign of like any kind of panic selling at all at this point, except what we saw on Thursday. And this candlestick here, I have talked about it before, but it is very important because this is throughout this entire rally, we were going up, but then when the bears did strike, they really made their presence clear. It's sort of like, given that we are in the summer season, you could compare it to like one of those shark movies, where things seem to be going all right, and then there's a bit of a nibble, There is a shark out there. Okay, so the big question, to continue that story, have the sharks now gone a bit under the water, flip their tail behind, and then they race up to really go for the kill? I'm not sure. What I do know for sure is that there is incredible frustration on Wall Street among the top analysts, the big brains, the powerful people that are very furious about this rally. Talking about how it is fueled by retail money and all of that. And while I certainly do find it a bit fun to see their frustration that because many of them did not participate in this, we should also respect that there is a lot of power there. And there are a lot of people now who do want to see the market go down for many different reasons. And that can create a bit of a spooky situation. We are now in the summer period when many are taking breaks from the market, especially some of the institutional players who have a solid bullish bias, because they do not have the ability to get into short selling and bearish strategies, which means that we have this period where you have a bunch of retail money that could be trading the market, primarily from a bullish perspective, but then you have the more sophisticated investors, that hedge funds and stuff like that, could also exploit the limited liquidity in the summer period, meaning they could have more of an effect on the market. So I do think that there's reason to be cautious now. This candlestick here, it was a bit of a shot across the bow, showing that there is some players out there that are more aggressive on the bearish side. So just be careful. Something is afoot. And as I have said so many times before, you should be diversified in a genuine sense, to have a mix of different kinds of asset classes. You want some stocks, you want some bonds, you want some forex, some cryptos, you want some commodities. Wheat is a commodity as an example, and also some exposure to volatility, to be able to benefit from it. Okay, so whatever you do not fight the trend, and may the trend be with you.